start welcoming people. Welcome to our U.S. Tax Canadian Mexican webinar. We're just going to wait for a few others to join here. We'll get started in a minute or two, so just be patient, but we'll get started shortly. Give a couple more minutes here, a couple more seconds, I should say, for others to join. I'll get started in about 30 more seconds. Welcome, everybody, as we see some people click on here. Just going to give it a couple more seconds for a few more folks who are trying to click through and join. Yes, there will be a recording available after. We will answer the questions in the chat, but yes, the answer is yes. So we're providing a recording. You can use the arrow keys. Okay, get started. All right. I think we'll just get started now. Well, welcome, everybody. It's so wonderful to have you join us for this live webinar. We're very pleased to be here to educate you guys. We've definitely, over the last number of years, have had a lot of requests or information, and a lot of people seeking information on U.S. and Canadian tax when it comes to moving from Canada or Mexico into the US. So we're going to be able to share a lot of interesting information for you with our expert, but also have a nice session at the end for questions and answers. So make sure you make note of your questions, and we can try and open the floor at the end and answer some specific scenarios. Quick bit about us. We won't go very long, but obviously that's myself there on the left, Samantha White, and our co-founder, Julie White. We own IntelliStaff Medical. Basically, I'll give you a quick, little bit about our business. Most of you, or a lot of you, already know us. So we do help Canadian and Mexican registered nurses with their journey into the US. That's the name of IntelliStaff Medical, and that's what a lot of you know us for. We are a boutique firm. We're not a super large company, but we are certainly robust in our delivery and our client base, and have many, many years experience. As you know, many of us already know us for our ability to have really strong one-on-one relationships with our nurses and our clients. We walk you through the whole process, literally from A to Z. And everything in between that. So a lot of you will know us for our logistics expertise and all the things that we provide for you during your journey. And many of you, I'm happy to see on here, are definitely our friends. So yeah, I'm proud to introduce our expert, Joe the Tax Man. Quite a few of you also may already know him. I'll give the floor to Joe in a second, but yeah, Joe is based in the US, and he has a very colorful background. I'll let him introduce his background. But Joe is an expert when it comes to this topic. So we're very pleased and also very thankful, Joe, to have you join us. I'm going to pass the floor over to you to introduce yourself and take this tax webinar from here.
And thank you for the 30 plus people so far that have joined us this afternoon. And this is a tax chat. So it can be involved. It can be a little difficult when we start going through this, but the goal of this is to help simplify the mystery surrounding cross-border tax when you're looking and contemplating working in the US from either Mexico or Canada. Give you a little bit of background about me. Way back in the 1990s, before most people were born, I double majored in respiratory therapy and accounting. And I went out and traveled for about 4 years as a travel respiratory therapist. And along the way, I started doing some tax work for my coworkers. And back then, in the infancy of that, it was just the US, but I had to do a lot of multi-state work. And then when I started my practice later on, I had quite a lot of Canadian clients, international clients with that. And I looked at all that and I saw that something was not being done right. So I branched out into doing Canadian returns as well. And now it's been almost 20 plus years since I started doing all those things by hand. And with all those years of experience, and you see how the IRS and CRA and of course Mexico and the SAT start changing and interacting more now that we're in a more digital environment, the tax laws change with that. And so the goal here is to unclutter that as much as we can. And we're not going to cover everything. You may have some very pointed or very involved questions, and we do encourage you to follow that up. Go to our website, www.traveltax.com. And we have some consults directed towards that to be able to wrap up some of those more esoteric items that we can't cover here. So to get started, the audience here is consisting of Canadian and Mexican medical professionals looking to come to the US. And typically in this kind of an environment, I find that there are three types of individuals which I begin, if I'm doing their tax returns or doing a consult, there are three pathways that are very common here. And if you see it on your screen, the three common pathways, and again, the most common is temporary assignments. You live in Canada, you live in Mexico, and you're coming here doing a temporary gig. In the healthcare staffing arena, that is normative. That's how most people come to the US and begin working. 3 months, 6 month, maybe 12-month assignments. They have every intention to go back home. They're not necessarily looking to move yet. They're only coming temporarily. That is the majority of who we'll be talking to today, but they have the other two pathways. Those that actually have an intentional desire to move to the US, and even on a TN visa for tax purposes, you can do that. I have clients that have been working under TN visas for over 30 years since the entire regime was created in the Bill Clinton presidency in the US. It can be done. You can live here so long as you have a job. And then the third pathway, which we're really not going to cover because it's way more involved, that is the dual citizen. You're already a dual citizen of Canada, the US, or Mexico and the US. That creates a whole different can of worms when it comes to the filings in the US. So we're going to focus primarily on those coming here temporarily, and to a lesser extent, those that are intending to move. And as I discussed, pathway one, the temporary approach coming here. I'm going to split this out between Canada and Mexico so to intersperse the information here. The big picture, what's going to happen when you work in the US temporarily if you're from Canada and if you're from Mexico? Well, the big picture is your resident nation is going to tax everything. Doesn't matter where you earn it, even if it's on Pluto. They're going to tax everything. So you come to the U.S. And its states, if they have a tax, there's 8 that don't, are also going to tax that income. And because you're an employee in the U.S., you'll be subject to Medicare and Social Security taxes. So for both of them, for both Canada and Mexico, it sounds like you're being double taxed, but you're really not, because the tax that you pay to the U.S. and its states and Social Security and Medicare are going to be a credit against your liability, tax liability that you have to CRA and to Mexican SAT. That means even though they tax it both, effectively you only pay the higher of the 2 rates. And oftentimes Canadians coming to the U.S. wind up paying a gap, as I call it, to Canada revenue, because in most cases, Canadian taxes are higher than the U.S. And this brings sort of an interesting side note: which province is best to be a traveler from? British Columbia and Alberta and the territories are. The ones that are not so friendly to cross-border work is Quebec first, and then the Atlantic Maritimes. So in those cases, in Quebec and the Maritimes, and a lesser extent Ontario and the middle provinces, you will find yourself owing a little bit to CRA to make up that gap between the US tax and the Canadian tax. That's the big picture of that. And for Mexico, you pretty much have the same thing. You will be taxed by SAT on all of your income, less the credit that's allowed for the US tax. Now, I will say one thing that I've, based on experience here, it doesn't make it right or doesn't make it wrong, but SAT has a tendency not to really enforce this. A lot of times you'll go to Mexican preparers and they'll say, so what? That isn't licensed to evade, but you will find that that is a little bit more of a general approach to all of this. But I don't do Mexican returns. I do Canadian in the US. I will leave that to a Mexican preparer to handle that. But it is my experience that Mexican SAT does not really pursue this as much as Canada does and Canadian Revenue Agency. So that is the big picture for the temporary worker. But what about the individual that has every intention to move? Well, if you, in the year that you move, this is easier for somebody from Mexico than it is from Canada. So I'm going to cover the Canadian experience first. If you are moving to the US, the big picture is you're just going to file in Canada and say, I'm gone. In the US, you may file as a non-resident or a resident, depending on the number of days we have present. But the real sticker that you have to plan ahead on, you don't want to wait till you've done it, that you want to plan ahead on, is that under the Canadian rules, whatever hard assets you leave in Canada, real estate, or if you have a trading account that's outside of a registered vehicle like a RRSP, all of that is going to be treated as if you sold it and rebought it on the same day now as a US resident. That means if you have a principal residence, your principal residence exemption will become crystallized. If you have stocks and bonds in a trading account, you will have considered to have sold them so that the capital gains accumulated while you're a Canadian resident now get taken into account with your tax return. So you've got to plan ahead if you are going to move permanently to the US. And what do I mean by permanently? if you cease to have a home in Canada, or you are going to be in the US more than 2 years and the majority of your income and time are spent here. That is another topic too when it comes to how the treaty comes into play, and I'll cover that in just a second. For Mexican professionals coming to the US, you don't have a lot of that. In fact, Mexico does not have what's known as a deemed disposition, or you sell and rebuy your assets on departure. The thing you have to do is to inform SAT within 15 days that, hey, I'm not a resident anymore. Or if you don't do that, finish up with your annual tax declaration and note that in your filing. It's a lot easier to come from Mexico as a immigrating professional that intends to stay than it is for a Canadian. So you're going to hear a lot more about Canada here because the Mexican requirements just are not as robust as they are when somebody leaves Canada. So the overview of this that we just covered: Pathway 1, if you are working temporarily in the US, when you file the return, you are going to finish that US return first. You can also finish your Canadian return, but in the filing process, you have to get the US filed because CRA is going to demand proof that you actually filed the return. You've got to send your W-2s from the US. You've got to send the copy of the tax return, but you also got to show CRA some sort of tangible proof that I really did file the return. So what do they want? Well, they generally want a transcript from the IRS. That can take 5 weeks after filing. But the easier thing to do, if you have a refund, you get the bank statement, or if you had to pay, you do the same thing. Show the bank statement or whatever the receipt is showing that you have paid or received your refund. CRA will accept that, but you have to send that with the return. If you try to do it piecemeal, filing and then later sending it, it's just going to drag the whole process, not weeks, but by months. And it is a very common thing to find Canadian preparers not knowing this. So if you are working temporarily in the US and you're claiming foreign credits, you've got to show proof when you file that Canadian return. That means sometimes you're going to file late. And it's our goal, if that's foreseen, is to get you the amount that you would have to pay CRA ahead of time so you can do that by the due date, April 30th. And that in and of itself is an extension for Canada Revenue. And the overview of the filing with those that are permanently moving, I pretty much touched on that. You will be declaring departure in some way or another, either on the T1 for Canadians or by informing SAT if you're a Mexican professional. You're still going to file in both nations and the US states. And if there's any foreign credit overlap, maybe you're a temporary part of the year and then permanent the rest of the year, you'll have the same thing that all the temporary professionals have when they come to the US. So it's a more involved process. And I think what a lot of people forget is once they do this, they're not just the professional of one job. You are now an international cross-border professional. And it's something you should take some pride in, because while it's daunting, it's also manageable. And the experience that you get being able to work cross-culturally like that is amazing. I was a travel respiratory therapist. Yes, it was all domestic travel. I'm almost 60 and I remember those days. The wealth of experience that I had by the time I settled down was amazing. Things that drove other bonkers were nothing to me because I'd already been there, done that, and seen that. And as a medical professional, that brings a lot to the table when you're looking to give the best possible patient care. Now, that's the overview of the filing. The one concept that we really have to drill down to sometimes is under the US tax laws, how we address any kind of payments for lodging and meals. If you're doing an assignment 1 year or less in one area, or what's typical is 3 months, 6 months, 9 months, you sometimes will be offered a tax-free per diem, stipend, allowance, subsidy. It comes in all sorts of labels, but they all mean one thing: reimbursements for lodging and for meals. And to a lesser extent, you may have some travel pay thrown in there as well to get you to your assignment and to get you back home. Now, in order for those things to not be taxed, you have to have what is known as a tax home. And a tax home is not where you live. It is where you work. It is where you work regularly. It's where does all that money come from? Think of it as a money home. And in order for you to receive the tax-free per diems or tax-free reimbursements, you have to maintain a tax home that is not in the area in which you work. And that sounds a little counterintuitive, but when you're working temporary jobs, it isn't your main place of work. It is only temporary unless you stay too long. So the concept starts with, okay, where do they normally make their money? If you can look at their life and see that they go back to, say, Calgary and Alberta, and they go back and work consistently, frequently, but they go to the US and work in all these other places, well, yeah, your main place of work is in Calgary or whatever city that might be. But a lot of travelers, as we call them, don't do that. They go from one place to the next, to the next, to the next. And when you have that kind of a situation, you don't have a regular place of work. So then, if that is a situation, which is the majority of most travelers, your tax residence tax home can now default to where you regularly maintain your home, where you pay rent or shared expenses or mortgage. So you either have it by maintaining a job regularly, or because you don't have a regular place of work, you are not only maintaining your main home, but you have duplicated expenses, which is the buzzword, duplicated expenses, because you have home and home away from home expenses for your lodging. And that triggers the eligibility for you to receive those reimbursements on a tax-free basis. And this is where a lot of people get confused with this concept, because they think where they live is their tax home. No, where you live is sort of your legal domicile, but where you work is your money home, hence your tax home. And that's the way the IRS looks at this. Because you can live in one place and fly back and forth to the same location to work all the time. And then those kind of cases, you have a tax home and a permanent residence that are different from one another. And I have actually already covered this slide where we talked about a tax residence is your main place of income. Now, a lot of times in order to maintain a home, you will find some travelers paying rent or sharing expenses with relatives like their parents, especially if they are younger. If they are older, they may be leaving a spouse behind, so we don't have a problem with that because the spouse and kids, the house is still maintained. But what if we start renting or living with relatives? Can we make that a tax residence? We can, but you can't do it for free. You still have to have the rent or the financial burden of maintaining a home, that those expenses wind up being duplicated when you are away from home temporarily. So if you are doing that with a related party, whether it's parents, brother, sister, whomever, or even a parent with a child doing sort of the reverse. If you're going to be renting from them, it needs to look, smell, and taste like a rental agreement. You know, if you've got a basement apartment in Toronto and you're paying $50 a month for that, that's not really a burden. That's more of a gimme. That's a token amount. It's a freebie. You're not really incurring a burden for rent. You're not really incurring a burden for your housing. So this has to be a reasonable amount, either based on local fair market value rentals, or you can do like roommates do out once they graduate from college. They get together with a 2-bedroom apartment, 3-bedroom apartment. They just split the expenses for maintaining that dwelling. Either way, you're getting yourself away from this, oh, just pay whatever kind of mentality. That has to be in place. You have to maintain a home in order to be eligible to receive those reimbursements. Moving along, let's say you own your home and you begin traveling and you start renting it out without maintaining a part of it for yourself, or maybe only renting it out on a vacation basis, especially if you live in an area that is conducive to tourism. Then you can monetize your home while you're away by charging rent while you're working one of these temporary assignments. So if you have completely displaced yourself from your home because somebody else is living there all the time, we can't incorporate that into your tax residence for U.S. purposes. Storage units, you know, they're in gated communities, but they don't, you can't live in that. I know people who have tried. I've seen that. And it's sort of funny to watch. But storage units do not count as a residence. And then you'll see this more maybe in the US amongst traveling professionals, and maybe more so in Canada. But if you got an RV and you take that with you to travel and use that as your residence at an assignment, well, if that's your only expense, you're not duplicating expense. You're carrying your home with you. It's like a turtle carries a shell. So that's not going to qualify if you're attempting to maintain a qualifying tax residence. Other limiting factors with this rule, this is for temporary workers. This isn't for people who do consecutive series, endless assignments in the same location. The fact that you take 30 days off and come back doesn't change the fact that it's continuous employment. So you can't be in a place more than a year. And unfortunately, there's a number of agencies out there that try to play loose with this and tell you, okay, after a year, go home 30 days, come back another 12 months. That's not going to work because you have now created a main place of work, and that is what a tax home is. Excuse me, a main place of work, which means multiple assignments in the same area can count as one in terms of your timeline. I have clients that live in Quebec and drive across the border to work in Burlington, and they commute every day, Windsor, Detroit, Tijuana to San Diego. If you're commuting, that's not a travel gig, even though it's in another country. You are no different from the person that maybe drives in the opposite direction and has a main job. You just happen to be crossing an international border when you do this. So it cannot just be a commutable assignment. If you're getting lodging and meal reimbursements, there has to be an expense to be reimbursed to make that work. And then you can abandon your home. In other words, let's say I don't go back home for 3 years, even though I'm paying for it. Well, you're really not living there anymore. So you got to be careful of that. And the IRS likes to see you come home for 30 days a year, at least. And it doesn't have to be consecutive. And I see some questions accumulating here, which I will come back at once we finish. Another thing to keep in mind is you may have heard of the 183-day rule. And what is that? Well, if you come to the US and you're here more than 183 days, well, that makes you a resident, right? Automatically. Same thing in Canada, same thing in Mexico. But all three of these nations, US, Mexico, and Canada, we each have a tax treaty with each other. So if you are still maintaining your home in either Canada or Mexico, your permanent home, not your business rental property, but the place you live, if you come here, that 183 days is overridden by the treaty. The tax treaty sort of acts as like a ceiling, or it overrides domestic law. And even though the US rules say 183 days, you're a resident, if you maintain a permanent home in Mexico or Canada, the treaty would come in and say, no, they remain residents of Canada or Mexico or whatever nation they are from, Philippines, or any nation that has a treaty with the US. So tax treaties become very important here. And this is why keeping a home in Canada or Mexico when you're here temporarily is so important, because otherwise you may fall under the residency US tax net. And that means all of your assets, no matter where they are. So we want to stay on the right side of the treaty there. When you are working in the US, especially as a Canadian, consider giving to the 401k, 403b. Now, what is all that fancy numbers? That is employer-based retirement, like an RPP is when you're working for a Canadian employer. Why do you want to do that? Because not only is the contributions deductible on the US side, on the Canadian side, they are treated as an RRSP contribution or an RPP. As long as you have contribution room, you can use the 401k, 403b, that employer-based US retirement, in place of a RRSP contribution. So most of you are nurses. The analogy I like to use with this is you got two IVs running, and you got them both draining at the same rate. So when you come back 30 minutes later, you should see the same amount of fluid if it's the same size bag, same amount of starting fluid, right? So you want to drain all that equally. So imagine that being your taxable income. I'm knocking it down on both sides. If you only do it on one and not the other, you got a different rate. And you come back and you find one bag has more than the other. That doesn't help very well when it comes to minimizing your overall tax. Excuse me. Health insurance in the US is a pre-tax benefit if it's coming through your employer. So that is another way to reduce the overall tax burden. And one other thing to consider, excuse me a minute, is that stipends and per diems are not income. If they are given to you as a reimbursement, they are expense offsets. They are not income that you can normally use for loans, for Social Security, CPP purposes, or any other kind of older age Social Security type payments. And another thing Canadians should not do is open a Roth IRA in the US. CRA does not recognize Roths. They treat them like savings accounts because there is no equivalent type of retirement account in Canada. The other thing that comes up a lot is banking. When it comes to non-residency in banking, they will often give you what's called a W-8 form for treaty purposes. So if they pay you interest is usually taxable to the resident nation. So they will be able to treat your account appropriately when any payments like that are in place. One other thing to consider is if you are in the US more than 183 days, even though under treaty you're treated as a non-resident, you are going to have to do what's called a foreign bank account report. What that is a disclosure, not a tax, a disclosure of all of your non-US accounts that you can, the best analogy, put your hand in the cookie jar and take out a couple of cookies. Bank accounts, savings accounts, RSPs, TFSAs. All you're doing is reporting the accounts, the maximum value there, if that total value, throw it all in a basket, total value, not per account, is more than $10,000. Almost every nation in the Western world has signed on to these kind of reporting to prevent money laundering and terrorist-related activities. Banking, for Canadians, the banks that offer sort of a cross-border situation where you can freely convert back and forth, like of RBC and TD Bank. And something to have a little fun with, most Americans don't know that TD stands for Toronto Dominion. They think it stands for touchdown. So you'll have a little fun with that one when you're here. And on the Mexican side, you have a number of Canadian banks in Mexico, like Scotiabank, and Santander, I'm probably butchering that word, and then the Citicorp version in Mexico. Those have a tendency to be more internationally aligned. Just a couple of hodgepodges with the 2 minutes before I start looking at the questions over here is sometimes when you're working for U.S. agencies, now IntelliStaff is set up because they are cross-border. They're not going to have a problem with this. But some of these staffing agencies, even though they want to employ people from outside the U.S., their payroll is not set up for it. And they insist on the U.S. address that is different from the assignment. And even today, I had a client from Canada working for another U.S. agency in which they were reporting the wages to the place where the agency is located, not where the provider, the nurse, was working. So it's a little sad that if they want to hire somebody from outside of the U.S., the payroll won't accommodate a foreign address. So it's something to look out for. We're very much used to that here. I do a lot of compliance work with agencies, so I usually can find somebody to get that fixed or get a letter so it's easier to file the return. There are some good apps for the currency rates because you're going to have to deal with the conversions in pesos or loonies, which is the Canadian dollar. I have an app called XE, which is fantastic because it updates almost every 10 minutes. Because even last year, I traveled to Japan and Korea and the Philippines, Canada, and it's good to know where what the exchange rate is. Filing deadlines in Mexico and Canada is April 30th. In the US, it is April 15th and extendable. And if you are outside of the US and have to file in the US, your due date is June 15th. And then before we take questions, how is my pay going to look? When you get paid by an agency, you will always have your taxable wage. And if you get any kind of allowance for lodging and meals, you will see that separately stated. We will also see separately stated any kind of travel pay that you get and any miscellaneous reimbursements as well. And an overview of what per diems are. Oftentimes people will tell you to go to this website, the GSA site. The U.S. government has, for their own human resources purposes, for government employees, cost of living amounts for lodging and meals in particular areas. And so a lot of times these agencies will pay based on that number. That number is sort of a ceiling. They can pay up to that amount for lodging and meals without you having to give them a receipt if they have done all their due diligence. in screening for the presence of a tax residence. And right on time, less 2 minutes there. And we have quite a lot of questions here. Let me start from the beginning, unless one of you guys, oh, you got it right up here for me. Thank you. The question is, what if you decide to sublet or lease the home, being the home you own, for the duration of an assignment while away? Well, the first question I'm going to ask is, how long is the assignment? Let's say the assignment's 3 months. Well, if you sublease it for 3 months, or lease it out for 3 months, if you own the home, if you have an apartment, you would be subleasing it. If you do it only for that amount of time and you come back, that's fine. That's actually a very savvy way to monetize an expense or an asset that otherwise would just be dead. Again, what you cannot do is fully displace yourself. So if you want to travel for 6 months and be at home 6 months, yeah, go ahead, rent out your home, sublet your place for those 6 months. Now, one thing to keep in mind, especially on the Canadian side here, is that sometimes you're going to run into some of these new rules. Underused housing tax, and in some of your municipalities, when it's a short-term lease, are going to demand that you register with them. And if you don't register with them, CRA comes in and says, hey, you can't deduct any of these expenses against your rental income. So do your homework ahead of time on that. I guess this is a follow-up. What if you rent it out for a year or longer? Again, that goes back, have you displaced yourself? If it is not your home and you're not showing occupancy at least 30 days a year, then that can't be the basis of a tax residence. Now, remember, you can always, let's say you have a 3-bedroom home. You can rent out 1, 2 bedrooms as long as you have your place that's always available to you at any time you want to return. That's a partial rental. That's not a full rental. But typically, you will have a better chance of just doing vacation rentals while you're away. And when you come back, you have the place all to yourself. Nurse practitioners are no different from RNs and all the rest. This is rules that apply to anybody. You're either a temporary or you are a permanent employee. Now, the one thing that I've got to be careful with, because it's beyond the scope of this, oftentimes you will find what I call order givers, nurse practitioners, physicians, will be treated as independent contractors. That is an entirely different seminar, because the rules for deductions and the rules for self-employment have a different angle that you have to deal with. So good question. But when it comes to taxes, your badge doesn't change it. You're just a taxpayer. Let's see. If I transferred 40,000 Canadian line of credit to my checking, should I declare it? If I'm assuming this is in terms of the foreign bank account report, if you are in the US more than 183 days, lines of credit are part of what is reportable, because it's like a cookie jar you can reach into and grab out of. And it's important because when you work in another country, your resident country and that other one, that treaty gives them the authority to look at each other. And they may have one set of eyes watching money moving and the other one too. So if it's on your return, if it's on the disclosures, you're covered. Because watching that money flow back and forth is something that they're looking at. As a Canadian RN, having a TN visa for more than 1 year contract, do I ask my accountant in Canada to just do the filing for both? Is there an option to do separately? I actually have a video on my website about this. And I have a good friend in Arizona who's a cross-border estate planner. And he wrote an article called The Tale of Two Accountants. And I don't recommend it because you can't do one without the other. And unless those two are talking, it's not going to work very well, and it may not work to your benefit. Why? Because you got to deal with the treaties. The Canadian preparer is not going to know that you shouldn't give to a U.S. Roth. There's a lot of interplay and interfacing. I have clients we do this for. We just do the U.S. They go to their Canadian preparer. In practice, some of the Canadian preparers are fantastic. Otherwise, about 5 months later, I got a letter from CRA asking proof of my foreign credits. Why didn't your Canadian preparer do that and give them proof? So it's a knowledge thing. You know, do you want a neonatal nurse working on in the cardiac ICU for adults? Really, you got to merge the knowledge. But it's a good question that I see often. What if I work in the States on a 1 year contract and my husband stays working in Canada? Does it have any effect on our property investments? No. I mean, under treaty, you're still going to be considered a Canadian resident because your spouse is still there. And unless there's a divorce or a separation, that permanent home is there. So the treaty comes in, overrides, and says you're a U.S. non-resident. So as a non-resident, you don't get taxed on anything outside of the U.S. So no, that is perfectly fine. It's not going to change anything in your property investments unless you decide to move permanently. Then that's the time for another discussion on this. What is the next question that we have here? Should I also declare all the interest earned in my savings account? Well, that's sort of a broad question. Interest is taxable income. So I'm just going to throw out some scenarios here. Let's say I'm a Mexican or Canadian resident and I earn interest in my home nation, but I'm working temporarily in the U.S. The U.S. doesn't care about that. You just report that to your home nation. But what if I am temporarily in the U.S. and open an account that pays me interest? Under the treaty and under actually U.S. tax code, that interest is only taxable to your home nation. You do have to report it on the return, and you do have to make that treaty or code section declaration to exempt it out on your report, your return that you file with the U.S. For savings accounts of more than 10 that is accumulating during the assignment period is also taxable. Well, this goes back again to interest. It's taxable depending on your residency. Now, if, of course, you are subject to the foreign bank disclosure rules, that's 10K, well, it's reportable. Now, one little tidbit there, it's 10K US. So under the current exchange rates, that would be more than 14,300. And then the equivalent conversion in Mexico, pesos to US dollars. So interest is always going to be taxable unless it's inside a retirement account. It just depends on where it gets reported and then ultimately who actually taxes it. Just to make sure I got it right, what is your recommendation? Again, file Canadian tax or US tax first? If you are a temporary from Canada, you can do them both at one time, but in filing process, the US has to be filed first before the Canadian if you want the smoothest process. If you try to file them both at the same time, CRA is going to deny those foreign credits and ask for further proof. If you want to take that path, fine, but it just delays everything, especially if you're going to have a refund. Now, when clients come to us, because Canadian tax reporting is so much later than the US, in the US, all that stuff has to be out by January 31st. W-2s, brokerage companies like interest and dividends can wait till almost March 1st. But on the Canadian side, they're still sending these things out. And in fact, the e-filing for Canada just is opening up soon. We're at the end of February almost. Things are a little bit more delayed on the Canadian side. So my clients will come, we'll get that US out of the way so it can be processed while they finish by sending the rest of their Canadian tax slips and documents. We accommodate, we work with that. If a nurse is self-employed, okay, this is almost a subject of an entirely different seminar, but let's take a stab at it. Self-employed as an Inc. and does travel nursing in Canada, but accepts a direct hire role in the United States. Are you able to explain the tax burden in both countries? A nurse be able to pay lower taxes in Canada through corporation and be able to write off business expenses. Okay, this is a much broader topic because mostly we're talking about employees on this. Why I will leave this answer with something that's very important. If you are going to take a permanent job in the US and you have a Canadian corp, now you are going to be subject to a whole bunch of disclosures, and your Canadian corp may not be valid because that Canadian corp may require a Canadian resident to be the owner, and residency being tax residency. There's a lot more with that to untangle, but as an independent contractor or somebody working through their own corp, there are avenues of tax savings, but it's a lot more involved. And of course, you got to be committed to working like that all the time. And in the US, there is a constant friction between whether you're self-employed or an employee, because generally governments like employees, not self-employment. So give us a call and I can go over a lot of that with you in a separate session. And other questions?
I think those are all of our questions so far that we've received. I'm going to do one last call out for questions if anybody has any.
I do see one up here. Will this recording be available later?
Yes, and I did answer that. We will have this recording available on all of our social medias as well as YouTube for both TravelTax as well as IntelliStaff Medical. We'll also be emailing everybody the links to those recordings after this seminar. It'll probably be Monday when those go out.
And I'm just scrolling through some of the questions that were posted. And it was good to point out that TN visas, nurse practitioners don't. And one other thing about TN visas, it is an employment visa. So when we have the discussion about self-employment, that won't work because you can't self-sponsor yourself. Only management consultants usually have an angle to be able to work self-employed in the US under a TN visa. Yes, I've seen it. It'll give your immigration attorney a heartburn. And
it'll be very difficult right now crossing the border with that. We're noticing that right now the border is becoming very difficult to cross. So the more the more unique of a circumstance that you're having, I could see that being more difficult to get there just because of the new administration.
And one other thing I'll throw in, this is why filing your returns is so important. Just don't ignore it. Because if you got no return, or if we're medical professionals, right? If it wasn't documented, it never happened.
So HP has a very important question. Can we hire as an accountant?
Can we hire an
I
accountant?
believe they're asking if you're currently taking clients.
Oh, we never turn them away. If you get too late down there, we'll make sure you got all the extensions in place that you need. If you go to our website, we have a TravelTax University, which is like a subscription based with a lot of educational material inside of it. And if you don't do anything, subscribe to my blog because new stuff that's coming down the pipe, I'm going to stick something up there about it that can keep you informed in the event of any tax law changes.
So yes, please reach out to TravelTax if you're needing help. I'm also I'm a dual citizen for both Canada and the USA, and I've just realized I can't do my taxes out by myself either. It's just too complicated. We all need professionals. Like, I don't do my own surgery myself, so I'm gonna not do my own taxes. So I think that's where it's really important to go to the professionals. As well, please subscribe and like so more professionals can see this. Oh, thanks, David. So David just added, if a nurse is a GC holder and maintains Canadian citizenship, but all earnings are in the US, is there any obligation to Canada from a tax perspective?
GC holders, that means green card. For tax purposes, a GC holder is the equivalent of a U.S. citizen. So U.S. citizens, green card holders, regardless of where they live, even if they live on Mars, they got to file a U.S. tax return. So the question is, very valid here. Let's say I'm a GC holder, citizen, and I maintain Canadian citizenship. The U.S., other than one weird country in Africa, Eritrea, is the only nation that taxes based on citizenship as well as residency. So your Canadian citizenship doesn't trigger a Canadian filing. If you are living, breathing in the U.S., working in the U.S., you will not have a Canadian filing unless you have Canadian source income, like a rental property or resource earnings. If you're a partnership and you own property, natural resource, it has to be Canadian source, or even dividends from a Canadian company, but your brokerage takes care of all of that. So no, there's no obligation unless you have some particular assets that are generating income.
Do we have any other questions? We did have someone ask what the website is, and I've got it up on the screen. So it's TravelTax. Oh, one more. Here we go.
Should I file if I'm not in Canada the entire year? Whether or not you're in Canada doesn't control this. The question first is, have you left? And if you have left, you have to file a final return. So if you filed as a resident in 2023 and have not been in Canada in 2024, you are still considered a resident unless you file a 2024 return and say date of departure, date of exit. You got to close it out. Otherwise, they're going to expect you to keep filing because nobody just drops off the face of the planet when it comes to taxes. Any other questions in the last minute?
Let's give it another minute, see if anybody's got questions. While we're waiting for questions, I did want to say that we do offer a referral bonus for IntelliStaff Medical. So if you have any registered nurse colleagues or friends or family, as well as medical lab scientists, we do like to place those in the USA as well as in Canada. Please go to IntelliStaffMedical.com/refer and go ahead and refer those to us. We would love to place them, as well as we have many of our jobs currently listed on our website if you're currently looking for a new position.
And one thing too, a lot of this is a lot of information, but I had mentioned it earlier. We have formal consults that you can sign up for before you even come, and we'll go over every nook and cranny of your situation to give you that confidence that you're going into this with eyes wide open and you see everything before you. So our website has the whole list of those.
Okay, well, I think we can thank everybody for joining us today, and we'll make sure to send you guys all links so that you can refer this to this webinar later, because it was a lot of amazing information to consume all at once. But we'll make sure to send that out to everybody, and thank you again for coming, and thank you again, Joseph, for doing this amazing presentation for our community.
Thank you for having me.
Thank you.